Time once again for the Farmweek Market Report. A lot going on this past week. Things in flux on multiple levels. Zac's got all of it in his report.
That's right, Mike. This week in the markets, we're giving you the numbers of the commodities we'll follow. We'll talk about the current state of row crops, specifically wheat and soybeans, and we'll also touch on lumber, all that and more. Markets continuing a downward trend, but not as much as it may seem. Most of these falling prices only slightly lower. Let's take a look. Last week's biggest loss, lumber by about $12, but keep in mind last week it rose $98. Lean hogs also down by about 4.5 cents, continuing from last week's fall of about 13. Last week's biggest gain, wheat up 19.5 cents, reaching a high of over $7. It hasn't been up that much since May. We'll get into why in just a moment. So why the sudden rise in wheat prices? Well, it's not as big as it seems. Wheat was up past $7 this past spring, but as we said last week, we're in a weather market. Drought and dry conditions in wheat country still drag on, and prices will continue to be high as a result. On a global scale, wheat production going as normal with a few lower yields here and there. That means we're likely to not run out. It's just that supplies are lower than normal. Market analyst Matt Bennett has more.
The thing about spring wheat is that they just have had terrible weather, for that spring wheat crop. And then you come in here this week and you see the spring wheat tour and come out and they say 29 bushel yield. The 5-year average for this tour is about 43 bushels. So you're looking at about a 14 bushel smaller crop. And especially when you're talking about 43 to begin with, it's substantially smaller than what we're typically used to. The total U.S. wheat crop is going to be smaller. We know that. Canadian wheat crop is likely to be smaller from what estimates are coming in at. World wheat is going to be kind of steady, but whenever you see that much in the way of weather issues with the spring wheat issue, there's no question that the fireworks were going to happen, especially whenever you look over to corn and soybeans. We've had a lot of crazy weather this year, wild disparities from really good to really bad. And whenever you see parts of the country not getting any rain whatsoever and carryouts as tight as what they are, the fireworks are not anything that surprised me.
In soybeans, prices down slightly, only about 3.25 cents. And one of the reasons for it is the same as all other row crops right now, weather. Rainfall happening at the right time has taken pressure off potential low yields this year. On top of that, the USDA Crop Progress Report says the top 18 bean producing states, the majority of crop conditions looking fair to good. That all adds up to a potentially good harvest, meaning more supplies in the future. Once again, Matt Bennett gives us the details.
I think whenever it comes to soybeans, relatively speaking, you're talking two different things. Okay, soybeans are an August crop. We know that it's going to take a while until we find out what this crop looks like from a yield standpoint. Corn, we've quantified more of that crop already. We know some areas are going to have a big crop. Soybeans, we don't really know that anyone is going to have a big crop, especially in the heart of the Corn Belt. So we need to get another 2 weeks under our belt, maybe a couple of good soaking rains before we can start to say we think that this is a 50 bushel national yield or better. Right now, the forecast doesn't look all that great, but I think part of the reason why beans got beat up so bad on Friday is that it was raining in the northern plains. It was raining in parts of Minnesota, and there's a cooler pattern advertised. So it kind of takes the heat off these beans, gives them a little bit of a breath of fresh air, and maybe they can wait on rain just a little bit longer.
As you saw, live cattle up in price about 6 cents. And one of the reasons for that is lower placements, as last week's cattle on feed report showed us. Essentially, live cattle rising for the same reason the past few weeks, supply. However, Matt Bennett says there's a little more to the story.
So last week, placements were like 92.9, and the market was expecting something in excess of that by about 3%. And so, basically you've got supply just a little bit lower than what people have thought. Boxed beef kind of bottomed out this week. And so I do think a lot of the supply issue or the supply bullish information is already into the market though. And so I don't look for cattle really to move substantially until they get more news. At this stage of the game, fats, in my opinion, over 120 are probably rich enough for the time being, but at the same time I don't necessarily see them going down substantially.
So we've been watching lumber prices rise in a big way this past year, only to see them fall big too. As we've been saying, much of that had to do with COVID lockdowns and the lack of labor to harvest and process the lumber. But there's another factor happening right now, wildfires in the Northwest. According to Forest to Market, both U.S. and Canadian companies scaling back processing. All that being said, they say there are two dynamics that will determine whether prices will rise again. One, housing prices. High costs means less being built. That means less lumber in demand. 2, supply. The wildfire compounded with post-COVID recovery and the specter of another possible shutdown means uncertainty. And that's it for a deeper look into the markets. Things are really in flux right now. We're dealing with ongoing drought and the consequences of that, which includes lower row crop yields, less food for livestock, and wildfires, just to name a few, and that's not taking trade into account. Bottom line, there's a lot of uncertainty right now, and markets tend to seesaw when that happens. Let's hope things will stabilize.